Hey, hey, YouTube, what's up? Hope you had a good week. Your trading's going well. Just wanted to come by, do a quick video, some follow ups on some videos I did earlier, making some predictions, etc., forecasting, analysis, etc. This one particularly is ticker TMO. And so, just taking a look at this chart here, we'll just real quickly recap basically what we talked about in the prior video, which was a failure, a forecasted failure of a real breakout upside and a more likely play to the downside just due to the consolidation pattern here being a descending triangle. So you have a flat trend line on the bottom with a decreasing slope on the top, which points to the lower degree. So if you are familiar with Fibonacci, retracements and extensions, you'll know that the beginning of a move, like here, swing low to swing high, that's 0 to 100%. And as you can see, it retraced back down to the flat trend line, consolidated a bit. The swing highs are going lower and lower, and then it creates this kind of descending triangle pattern. So this is what's called a descending triangle consolidation pattern. And the nice thing about this pattern is that it's a triangle, so you can see that it has to converge and the trend lines get tighter and tighter and tighter, and eventually it'll break out as it approaches the cross here, also called the apex or the cradle. And as you can see here, it's about 2/3, a little bit more maybe, which is common. So when you see a consolidation pattern like this, you're looking at about 2/3 from the base, which is here, to the apex. And then that's where you're looking for clues as to the directional bias for the breakout. Oftentimes it'll break out, like it broke out here. This might not be real, and it might come back to the trend line before actually making the real breakout. Or it could come back and then slam against you the other way. And so that's where we use what's called confirmations. And that's why I have a CCI here. That's why I have a momentum with a squeeze. As you can see, it's in a squeeze, which is really tight consolidation. And when it's in such tight consolidation, it must eventually break out. And as you can see here, the directional bias is bearish. There's not a lot of volatility, so the move might not be that big because there's nothing carrying it unless this is the beginning of the move and then volatility comes in and it just creates a massive, there's no way to forecast that. That's something where you just kind of have to get your consolidation pattern here. The trend line is your action point. So at this point you're in the trade and now you're managing it. And so you're going to be watching the weekly, daily, maybe 4 hour every day to kind of figure out, what's going on with this move. Is it slowing down, etc., so that you know when to get out of the trade and collect your profit. But in the prior video, we just kind of analyzed this, and then I drew a trend line, and I said, because price was actually up here towards the top of the trend line, and so I drew this line, which is equivalent to the base here, which is typically the breakout. That's going to be where price action sort of peaks, if you will, when the breakout's real. It'll make its way all the way up here. Now, since the breakout's downside, you could also do something like this. Typically on a triangle, the cradle here, whichever direction it breaks out real, eventually, statistically, more likely than not, so more times than less, it will Price action will go and go and go. It might zigzag here and there, but eventually around the apex here, it will make like a max pivot point or a max high or low. So when we get to here, we'll see where it's at, but price should kind of peak here and then move back up towards the trend lines statistically. Not always, just more likely than not. But as you can see on the CCI here, you can draw. I have a blue line here on the peaks, and you can draw trend lines on here and use it to kind of both forecast and get in and out of the trades early. And so the last time we were here, the peak was kind of up here, and I'm like, okay, what we're looking for here is like a breakout above or below this blue line. And if it goes above, it would have went upside, and obviously it didn't. So like right here on this bar, it's kind of like, okay, 1, 2, third time failed breakout of this trend line. It's going down to the lower degree. That tells me that this third time failed, which is about 2/3 or more to the apex, and so it's most likely going to fail. And there's not a lot of momentum bullish. It's in a tight consolidation. There's not really much going on here. The directional lines here are kind of crossing and such, so that makes sense because it's consolidating. The volatility is low, so it's not really in the middle of a move or anything. So there's just not a lot here confirming. Like this is not really indicative, but it's not bullish. It's definitely not bullish, so it's like neutral. This is definitely not bullish. But then price action failed 3 times, it failed here, then here, then here. And it's like, okay, it keeps failing and getting lower towards the next lower degree. So it's consolidating. People are making their bets, placing their trades, exchanging, probably getting out of the trades, like if they bought lower, etc. And so they all kind of seem, nobody wants to pay higher prices, so it just makes sense. And then this here, especially when it breaks out of the blue on this big red bar, this big red bar is kind of like a huge like alert. It's like, okay, that's not good. If it didn't break out upside when it should have, and now it's slamming down here towards the bottom. So that's when you should have kind of said, okay, I need to place a limit order here at the trend line 517.22, and that's your action point. And then lo and behold, next bar, it opens just above that, and then it goes below that. So already you're in profits. And so now you've got this CCI clearly breaking out. The squeeze here hasn't even fired yet. This looks like it's deciding bearish. So this is very early in the move. There's not a lot of momentum or volatility, so it could just kind of like hover here and then come back or something. There's no way to tell yet, but if you follow CMT rules, you're in the trade either here at the trend line or at this bar because you have a 1-2 bar confirmation. It closed here lower than this range. This closed lower than this range. And so you're either in here at the trend line or you're in here on this bar somewhere. Typically you wait for it to close, and then maybe you do your limit order just below like the range of this bar, so that if it continues going lower and it's real, then you're in the trade. But the CCI is broken out of the blue downside, and so that means, like if I was going CMT style, I'm already in the trade here at the trend line. I'm already at profits. The CCI broke out downside of the blue, and I don't close the trade until it makes its way back into the blue. And so That could mean a lot of different things. Like if the move's not real, it'll just maybe kind of go sideways a little and then up a little bit since there's not a lot of momentum or volatility. And so this will just kind of go a little bit sideways and then come up. And it's like, okay, it wasn't really a real move to the next lower degree, at least yet. So, you know, you should have a stop either right where you buy in or just very like maybe the top of the range of that bar or something, just very small for a small loss. Just because if it's not real, it's going to come back or it's going to slam the other way, and so you don't want to be in the trade. You want to get out because then you can either buy back in or just move on to another ticker. But essentially, this did what we thought it would, just based on everything here. The descending triangle patterns suggest a move to the next lower degree. Not always. Sometimes it breaks out upside. You just have to look at everything else and confirm it. And you just don't have much volatility, momentum. The directional index was consolidating. It's tightly consolidating. And it could have broke out upside, but it didn't. This bar right here is the giveaway. And so basically that's what we said. Well, it's right up here by the trend line, so let's plan for a breakout upside, but let's not buy yet. Let's watch. And so you get a red bar and then this massive red bar, and it's like a dead giveaway. Okay, it's worth the risk to place an order right here at this trend line. And then right now you'd be in profits, and then you just continue to ride it out. This squeeze hasn't fired. It could totally fire, and then you're going to get like 4 to 8 bars downside and a peak here, and next thing you know, it's like, it's down $100 or something, and you got a nice move. Volatility comes in, momentum picks up, and it just carries it down. And so you've got a nice trade, but there's no way to forecast or predict that. All you can kind of do is get an idea of what the market's doing. I like to look at patterns, use 2-bar confirmations for less risk. I mean, it depends on your risk management, but like some people think that buying short, going short here at the top, saying, yeah, I don't expect it to break out, I'll go short here. They would have made all this profit already, and so they could say, I'll just do a tight stop like right here, just above, in case it does break out upside. And so you could do that too. It's up to you. Totally up to you. That would have been a reasonable play considering that you've got the CCI in a downtrend. Even though it's at the top of the trend, this tells you this is like a historical moving average slash cash flow, if you will. And so this tells you a lot. Cash flow's coming out. Bullish sentiment is not looking very good there. So it would have been a decently high probability trade to short it here. But the CMT way is to wait for a 1-2 bar confirmation, and then because that usually kicks off a move that's real. Not always. So you have a 2 bar here and it didn't go anywhere. But that's at the beginning of the consolidation, and so that's why patterns help. Because now we're 2/3 to the apex. And so it's getting so tight here, it has to make a move. And so looking at this, it's just highly probable it's going to go to the next lower degree. So my forecast here is I'm in the trade at the trend line. I'm in profits already, and it's going to continue going lower. We'll see where it is at the apex and test that out. We'll see if it gets down here to what's this, 383-ish or whatnot. So we'll just see how it goes here. But for now, on this one, we'd be in the trade here with a tight stop and in profits. Anyway, that's it. Leave a like, subscribe, comment. Definitely leave a comment. The point of this channel is to facilitate discussions. So let me know what you think. Agree, disagree, if you have any ideas or you want to chime in something or you notice something, whatever. Anyway, take care and hope your trading goes well.